All right, good morning, everybody. As usual, we want to start with the market watch. Hopefully, everybody had a good weekend. Okay, if your market watch does not look like my market watch, if it is full of a bunch of stuff that looks like this, just hit the show all button, turn everything off, and then turn on Econo Day event. So you can see that we got the Fed talking. He is going to do his best not to interfere with anything. It's like Operation Don't Rock the Market. He did a really good job the last time he was talking. Very likely he's going to do the job again today. He's getting very, very good at it. So when he's talking, it's best to stand aside, be prepared for a little bit of volatility. He could accidentally say something, and or on the other side of that, he could deliberately say something really not expected, but we don't know, right? So best thing is just stand aside, recognize that it's at 10:30 in the morning, and when he's done, which could take quite a while, when he's done, wrap it up. We have the auctions today. We have additional auctions. So big deal. Notice that this is like some virtual conference, right? Very, very likely that the conference itself won't be the issue. It'll be if he takes questions afterwards. That'll be where he has the potential to really put his foot in it, right? But let him wrap up once he's out of the picture and we get the bond auctions done. We still have investor movement index and additional auctions again at 1 o'clock. So lunch may be a little more than it's normal. Not the 11 one necessarily, but 11:30. Have you seen my pictures in the chat where I'd already talked about the expectation that this week is likely to go sideways or down? Probably more sideways than down, but either way, after the run that we've had, the market really just needs a breather. Just needs to kind of pause a little bit. This is a significant move in one direction, right? It's like a lot of money went in one direction. It needs to pause. To just even be considered a healthy move, it needs to pause. And a lot of times, a market that is considered damaged, if it pulls back, then it heals that damage faster. If you listen to places like IBD or maybe a little bit in Benzinga, when they're talking, they'll talk about how the technical analysis can't be really utilized right now. The chart is too damaged. It needs to heal. We hear that kind of language at like Stock Charts TV. This is what they're referring to: moving too far, too fast, and then the repercussions of that. Now, in the overnight hours, we opened to the downside. Let me just put one of my charts back on here. So we gapped down at the open Sunday night. And as what typically happens when we gap down, the market spent a lot of its time working back up to close that gap. You can see that the 0.5% move will put us just above Friday's high, while a 0.5% move to the downside would put us below yesterday's low. The ES has an average daily range of less than 1%. But we very easily could see both sides of this, or even just one side of it. To break back down to the downside, we'd have to get through that floor pivot and the close of Friday, then the Globex low, then the 0.5%. If things get out of control, we could see 46.43, right? But there's not a lot of volume nodes in this area. So should we break below 46.50, then we are definitely going to 46.25, right? That 25-point zone is like a free fall zone. To the upside, we would resolve the intraday pivot that we are still working on, still haven't got past yet. If we get past that, then we will deal with yesterday's high and then a 1% to the upside. Notice the top of the expected move, less than 1.5% away. They decreased it yet again. It is very likely to be a range day, guys. And if it's not going to be a range day, that it could go to the downside. There is a very small chance that we could see a continuation to the upside. We never want to say, well, that can't happen, right? That's inappropriate to even suggest that a market can't do something. We know that the market can do whatever the heck it wants to do. This is a volume profile. One is time by price. The other one is volume by price. And you can see that we are very far outside the box on the 30-minute. And we are at the top of the box on the 1 hour. Likely scenario is we go down from here. It doesn't have to be like a crash and burn. Nobody's saying we're bearish in the market. It is just normal and healthy. Think of mathematics and the sine wave. Think of the ocean with troughs and peaks. When you're already at the top of the wave, you got to go back down before you can go back up to the next wave, right? You can't jump from the top. There's nowhere to go. So it's very, very likely that we will first go down and then come back. Notice that very shallow area that I was talking about. If we break below 46.50, we're going to 46.25. That's not a maybe. That's the target, right? That's where we're headed. That's what we would aim for. Look how very shallow that is. There will be no support there. 4711 is a cog line. 4711. All right, for the NASDAQ. We finally hit that pivot point. So we had a missed daily pivot until moments ago. We hit it. This is the gap close that I was referring to. Notice we gapped down a long ways. We actually gapped all the way to here. And then we dropped even farther than that. And then we spent most of the night trying to reclaim that level. We reclaimed it here. We're now in the positive, just barely. But the entire night was spent just reclaiming that level. So while this has an average daily range of 1.1%, it's already burned 12 hours, doing nothing more than getting back to where it closed on Friday. So from here, we're going to look for a failure of the floor pivot, move to the downside, resolve this Globex pivot point, Globex low, and then 0.5% to the downside. Yesterday's low as a pivot point is still in play. And I say that because a lot of people wouldn't have had the opportunity to resolve this liquidity, right? If you think about intraday firms who are not trading in the Globex, they missed this chance for anything that, for any of these trapped traders, for all this liquidity here that's only intraday trading, that still has its liquidity. It is very likely that there is a pool still there. So we will first deal with that then the Globex low. We have an intraday pivot point back here. It ties in very nicely with the rest of the market. And if we look at the volume profile, that's a very large, shallow area. The whole area, it's very shallow in here. So if we break through there, we have a little bit of support around 16.2. That's 16.2 to 16.15, right? That's a 50-point zone where we may grab a tree branch on the way down. Other than that, oh, buckle up, guys. It'll get fun. Yeah. Yeah, you like it. There is that head and shoulders showing right there too, by the way, right? Left shoulder, head, right shoulder. If we were to measure the break here, 1% from the bottom of that. That would put us inside of the negative zone here. So we know that we're very likely going to move farther than the 1% just because of that. That would complete the head and shoulders pattern. All right, so what's moving the market? The dollar and the bonds, guys. All I heard about all weekend is the yield curve, the dollar, the bonds, and don't forget Tesla's on the roll this morning. Tesla is rocking it out, and if we put that into a little bit of perspective, on the daily chart, Tesla closed 12.22.09, and we can just round that and say 12.22. In the pre-market, it is now sitting at 11.70, right? So it is down, yeah, a little bit. We do have a bit of a hammer forming at the moment. Keep your eye on this thing. It's a nice reciprocation play. You can see how we are way underneath the levels. Tesla is big enough to kill this market. It's big enough to knock the entire marketplace out. So, approach it with a little bit of respect and caution. That thing can literally take control of the entire trading day. You can see that the expected move on Tesla, 11.41 to the downside, and we were underneath that, right? You see how my mouse lines up on the intraday chart at 11.41. So that's how far the market had expected Tesla to move, and in an entire week, and it made the entire move at the Globex last night. All right, so you can see that significant move we had in the bonds, that picture perfect flag right there, nice little breakout. This is also offering an opportunity for a Busby, right? And a Busby would be that it comes back down and validates that breakout. Really want to keep our eye on the dollar. This thing moving around rocks the market. This is a real big deal. The dollar and the bonds are what is moving our market right now. The dollar, the bonds, and Tesla. Here's a 5-year look at the dollar just to kind of put it into perspective, right? Just kind of get a really good feel for what's going on. If we get back above this $95 line in the sand, things are going to get really interesting out there, right? We are looking at a Christmas rally. Don't let those bobbing heads on TV freak you out and make you think that everything's going to crash and burn. It won't be a known thing that crashes this market, right? It never is a known thing. All this stuff that they're chipping their teeth about and trying to cause you concern and making you look to the downside, that's known things. Some Joe Schmo on MSNBC who's probably not even a trader, just reading scripts, doing what he's told. Right? So pay attention to the indicators that we have, the dollar, the VIX, the bonds. Look at the earnings. Look at where the market's going on a day-to-day basis. We're very likely to have a weak week, that it's going to be soft, that it's not going to make large advances, that it even pulls back a little bit. It'll be common, it'll be normal, it'll be okay. We're still looking at, over $500 in SPY by the end of the year. For the bonds, same thing. We do have that critical level at around the 166. This is a really big deal. We're headed in that direction. We're not there yet. We just really got to keep our eye on the bonds. It's the exaggerated moves that are the most important to pay attention to. All right. The slow grind, yes, of course, by all means, if it continues to grind and continues to grind, it's going to affect our market. But when the dollar is sitting at a support level and then it breaks down below that support level, that's important, right? It just broke through a price ledge. This thing could begin to rock and roll. Same thing with the bonds, right? So there are times when the bonds move with stock, and there are times when the bonds do not move with the stock. To figure out if it's one of those days, which way it's going to be, if you see the S&P on the upside of a range pressing against the ceiling, and the bonds are at the top of a range pressing against the ceiling, it's very likely that they're moving in the same direction. But if you have the ES pressing against the ceiling and the bonds pressing against the floor, it's very likely that if the bonds break that low, the S&P is going to rock to the upside. Same thing inverted. If the S&P is sitting at support pressing against the lows and the bonds are pressing against the highs, then it's very likely that if the bonds break to the upside, the S&P is going to fall lower. We had a bifurcated market last week, days where the NASDAQ was the only thing moving, the Russell was the only thing moving, and that individually we had a capital rotation across the board that was phenomenal. Boring names that nobody ever looks at suddenly exploded and started moving. It's all a part of that capital rotation. You got to remember that a lot of the institutions can't go to cash. They actually get billed for that. They get not fined. Fined isn't the right word, but they have to pay if they're going to go to cash. They have to pay a penalty, a fine, a fee. Going to cash costs them money. So if they don't want to be in something anymore, they go somewhere else. They don't just go to cash. Right? And when they do go to cash, when they're willing to actually pay that fee or that fine or that whatever you want to, whatever phrase you want to use, when they are willing to pay that should really get your attention, right? So in the last week, we had a very large cap rotation. I posted a little bit of work on the sectors in the chat over the weekend about what sectors did good and by how much. And when you're thinking about what's moving around this morning, think about what sectors they belong to, right? What sector does Tesla belong to, for an example? Because Tesla's down quite a bit. And don't think that you know what sector something is. You may be surprised at how wrong you are and how often you're wrong. A lot of names don't necessarily belong to the sector that you think they do. I remember when we were looking at Starbucks, and I was newer, and I didn't quite grasp the logic that Starbucks is considered uh, in the same category as leisurely and frivolous spending, right? I thought that it went somewhere else completely, just totally wrong. Same thing with credit cards. A lot of credit cards are not finance, they're IT tech. Tesla is still down 3.6% this morning in the pre-market. It is a consumer discretionary name. So is Lowe's. And then on the consumer staples side, we've got Colgate, Walgreens. On consumer discretionary, we got Nike, right? So a lot of these sectors, and we can see those sectors from a different point of view, right? Come up and look at it from up here, asking again in the pre-market, what's making the biggest moves? Bitcoin is making some pretty significant moves this morning. 8.1%. Metals and mining, airlines, energy. Where's the other energy? And the other energy, right? Why two energies? Well, because one is just like broad outline, quote, quote, energy. The other one's more oil and gas. So kind of sit back with the big picture, recognize that the dollar and the bonds are going to be what really drive this market. A little bit of that economic news, and that we're very likely to see a sideways day. Let's take this all over to TrendSpider and TradingView. I did update TrendSpider a little bit. There are Smalls Exchange futures products that now cover pot stocks and weed, crypto, things like that. So I went over and I remade my crypto watch list based on the components that make up that crypto futures product, right? Think of it like a basket of stocks, and then just kind of asking like, well, what's in the basket? The Smalls Exchange, we hear where they got this new crypto stock index. This also has a basket of stocks, right? But first, I went after the pot crypto, right? Not crypto is the wrong word. I went after this pot futures product. Of course, I'm not seeing it now. It's supposed to be under 420. There it is, small cannabis. So I went in here, and then down at the bottom, it has components and weights. That brings up like a PDF document, and you can see what names are in this thing and by what weight. Same thing, we can do the same thing with all of these, but I was interested in crypto and pot because which names are they using? That's what I wanted to use for my own watch list. What's moving in the pre-market? How many of these crypto names are moving? Look at all the crypto names in here that are in the green. One is in the red, two are flat, the rest are green. By significant amounts, too. We're talking, 1.5%, 3%, 5, 7, and 9% for Mara. Monster moves in the crypto names this morning. And then, of course, we got the weed names. Same thing. Overall, looking really good. Some of my weed names have like marijuana real estate firms and things like that. So it's not all necessarily just pot names, but it is connected to the marijuana industry. A few of these names are in the red. A significant portion is in the green. So what's hot this morning? Chip names are hot. Pot, crypto, electronic vehicles other than Tesla and XPEV are all also very hot, right? The EV market out there. These four sectors right off the bat should be the go-to, the very first place to look. And then beyond that, of course, we already knew that energy was up, right? So we got energy looking really good. Energy is a great way to go because there's a lot of smaller names in there that we can kind of focus on. Airlines were up this morning, so we got airlines. A lot of sectors that are in play, right? It's almost easier to ask, well, what's not doing good this morning? The dollar, the NASDAQ, consumer, and of course, that's going to be because of Tesla. IGV is flat. Now, IGV is that ETF that we've been using for like a another perspective on technology. You can see the names that make up the IGV: Adobe, Salesforce, Microsoft, Oracle, Zoom, Activision Now, and Inuit Software. Well, rather than trying to trade these 8, we would just trade this one ETF. Rather than trying to watch all 8 of these companies, we could just watch this one ETF. Yeah, you like it. That is flat this morning. But when we start moving away from flat, communications, industrials, building materials. Now, EEM, guys, I've mentioned EEM more than once. This is like my risk on gauge. If I'm trying to get a feel for the trading day, are we bullish? Are we bearish? Is the global money bullish or bearish? You can see that we are up in the pre-market. We are fading off a little bit now. Still, we were up in the pre-market quite a bit. We still are up quite a bit. When I see emerging markets up in the pre-market, it kind of validates these bullish sectors that I'm looking at here. It's going to be pretty confusing if you're newer to kind of wrap your head around what's going on, because typically in the S&P 100, it's really only 5 to 6 names that's doing all the heavy lifting, and everything else is just kind of dragged along. It's going to be the complete opposite now. It's very, very likely that those typical big movers are going to be dragging behind, and that it's going to be everything else that's moving right now. So we're looking at TradingView in S&P 500. We want to set this to pre-market. I want to filter things out a little bit because I don't need 500 names. I just want 100 names. Perfect shot, man. That's like 1 in a million. Nailed it. Change the color scheme just a little bit. That is our market. Look at that. Risk on in the marketplace. We are just like full on firecracker. But the market ain't open yet. And when the market opens up and it feels the impact of Tesla, yeah. I've seen Walgreens knock the Dow down 700 points. All right. So the idea is now, of course, the Dow is a different kind of index. One is price weight and one is not. But still, markets can be shaped by big names in the market. Right. So indexes can be shaped by big names. As we come into the open, the impact from Tesla will reverberate through this marketplace. Another thing to keep in mind is over the weekend, a lot of news that comes out is not absorbed yet. On Mondays, we very often spend the first 30 to 45 minutes pricing in all of that news. So we could go from bearish to bullish, in the first 45 minutes, or from bullish to bearish in that same time frame. It's very likely that we're just going to hold the levels, though. I'm not looking for extremely negative conditions. Weakness, yes, and that makes perfect sense because of the move we've seen, in the last 2 weeks. But a little bit of weakness does not imply that we should be bearish and trying to run out there and open up a bunch of short trades. You don't want to climb down to the bottom of the ladder to where you're basically standing in the basement and then try to jump and go short. That doesn't make any sense. We don't short from the holes and we don't buy from the highs. Now when we're day trading, right? Swing trades are a whole different system. So this is the NASDAQ 100. We don't need to filter it. Set it to pre-market change percent. Adjust the color scheme in here just a little bit so it's more responsive. Green on the screen. A few names do stand out. Peloton is still getting whacked to the downside. They really put their foot in it with that report. You know, it's all about presentation, and they did not present it in a positive way. mRNA, Pepsi, Tesla really kind of stand out. NXPI, microchips are looking pretty good other than MCHP. So this watch list that I just brought up is companies that have weekly options. It's a very large watch list. I really can't sort it in the pre-market on Thinkorswim. 600 names, it'll start giving watch list errors. So we'll use TradingView. 600 names. How many names are up here in the pre-market? More than 1%. I have to scroll a long ways to get to the bottom of the list where we run out of 1%ers. Right now, I don't need to sit there and add these up. That's a lot of names. If there's 600 names, we're looking for a good 200 names to have, 1/3, right? I'd say we're a little less than 200 names that are up more than 1%, but we still have a significant amount of names. The sectors are going to be your best play. Follow the sectors and trade weights that are in them. But should you do want to step out of line, that's the other way to go, right? Focus on names that have weekly options and maybe aren't quite caught up to its peers yet. If it's already moved 9% this morning, you probably would want to trade something else, right? Find another name in that sector that has not made a 9% move. And that's what I have for you guys this morning. Be careful, be safe. I will be live streaming at the Bullish Bears in the large caps room at the regular time. See you then.